Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that shows a company making some interesting moves with its own stock. Let's just say they're paying their top brass in a rather unconventional way. Get ready, because we're about to decode a corporate maneuver that might leave you scratching your head. But it reveals a whole lot about how this company operates behind the scenes. And hey, before we get too deep, if you love getting these no-nonsense breakdowns of company filings, make sure you are subscribed. We also have a Discord community linked in the description below where we dive even deeper into these topics. So what we have here is essentially a public announcement, a Form 8K, which companies file when something significant happens that shareholders need to know about. Think of it as a company's way of shouting from the rooftops about material events. This particular report is from Brownie's Marine Group Incorporated, and it is dated the 24th of November 2025. This just means they're following the rules set by the big bosses at the Securities and Exchange Commission. The CC, they have to report these important things to keep everything transparent. The main event happened right on this date, the 24th of November 2025. Now, let's get to the juicy part. This section is where we find out about the company issuing stock, but not in the usual way. Usually when a company issues stock, it is for cash to fund operations or growth. But here, Brownie's Marine Group Incorporated did something a bit different. Okay, so here is the deal. They gave their chief executive officer, Robert Carmichael, who also happens to be on the board, a massive chunk of stock. We're talking over 24 million shares, and Charles Hyatt, another director, also got a big piece, over 23 million shares. Now, this wasn't some new investment into the company instead. They received these shares instead of getting paid in cash for the work they'd already done for the board. Robert Carmichael was owed about $133,500 in cash, and Charles Hyatt was owed about $117,000. So instead of handing over that money, the company handed over nearly 48 million shares of its common stock combined. Now, why didn't they have to go through the whole complicated process of registering these shares with the SEC that typically happens when new stock is issued? They're saying it is because this sale qualifies for an exemption under the Securities Act. Basically, they're claiming this was a private transaction where they didn't need to offer the stock to the general public. So it bypassed the usual registration hoops. It is a way for companies to issue stock without the public filing requirements, usually reserved for specific types of private placements. This section is where they talk about changes in leadership or how people are compensated, and as you might guess, it ties directly into what we just discussed. They're essentially saying, hey, remember that stock issuance we just told you about for Mr. Carmichael? That is also relevant to this part of the report because it is a form of compensation. We're pointing you back to the previous section for the details on that. And here is the official sign-off dated the 1st of December 2025. It is signed by none other than Robert Carmichael himself, acting as Chief Executive Officer. This shows he is directly involved in authorizing this report and the transactions it describes. So, what does this all mean? Brownie's Marine Group is using its own stock as a form of payment for its top executives. On the surface, it might seem like a way to conserve cash, which can be a smart move for a company. No cash is leaving the bank account right now to pay these compensation amounts. However, there are big implications here by issuing so many shares. They are diluting the ownership stake of existing shareholders. Every existing share now represents a slightly smaller piece of the company. If the company does well and the stock price goes up, these executives will benefit handsomely. But if the stock price falters, the value of their compensation also drops. It also raises questions about the company's current financial health and its valuation. Why are they choosing stock over cash right now? Is it a strategic decision or a necessity because cash is tight? Without seeing their full financial statements, it is hard to say for sure, but it is definitely a flag to pay attention to. Looking at it from a Warren Buffett perspective, we'd be asking, what is the intrinsic value of this company? Are these shares being issued at a fair price relative to what they represent in terms of earnings power and assets? If the company's future prospects are bright, this stock issuance might pay off for everyone. But if the company is struggling, this could be a signal that they are having difficulty managing their cash flow. It is a bold move, and only time will tell if it is a wise one for Brownie's Marine Group Incorporated. Alright, that is our breakdown of Brownie's Marine Group's latest filing. What is your take on this stock for compensation strategy and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.